Good morning and welcome to Market Cafe. You're on ET now with me, Lisa Fernandez, and with me is Shreyansi. A very good morning to you, Shreyansi. And during the course of the next 1 hour, we take you through what's trending across the globe and also back home. So let's start with the international handover. Oh yes, Shreyansi, you're wearing green and even I'm wearing a shade of green. Looks as if we are manifesting a positive mood for our markets ahead.
Yeah,
but what about the international market? How has it panned out?
Absolutely. And when you look at the markets also, you've got the S&P 500 adding about 0.5%, 0.4%, putting it 1.2% away from its all-time closing high. And that was, of course, reached in January 2022. Now, when you look at the tech-heavy NASDAQ also, that gained about 0.6%. The 30-stock Dow also was marginally higher. So stocks have rally mode as of late, with last week's indication of 3 likely interest rate cuts from the Federal Reserve in 2024, providing another catalyst for the market at this point. Now, signs of cooling inflation have also helped risk assets. In fact, when you look at all 3 major averages, they're on pace to finish December with gains. The S&P 500 is up 3.8% for the month and coming off its longest weekly winning streak since 2017. When you look at the NASDAQ and Dow, both of them are up 4.8% and 3.8% respectively. Another factor that has aided the rally has been a pullback in treasury yields. So when you look at the yield on the 10-year treasury, that was about 2 basis points higher at 3.9%, around thereabout. But however, when you look at the level from last week, on Thursday, the yield fell below 4%, hitting its lowest since July. So that largely is the handover coming in.
Right, but a lot of things happening on the oil prices, because if I look at the oil prices, they are rising, and that is because of the European trade. The slew of firms have suspended travel across the Red Sea as well as Suez Canal, and that usually carries around 30% of global container trade. Now, BP became the first oil major to announce that it would halt its transit through the route as a safety precaution, as Houthi militants, they continue to target the ships with drones and missiles from Yemen. Now, oil prices, they gained on the potential that there will be supply disruptions going forward, and adding support to the rising oil prices. Even Russia had said earlier on Sunday that it would deepen oil exports cuts in December by potentially 50,000 barrels per day. So that's a double whammy coming in for the oil prices. If I look at oil prices currently, WTI, that's 0.2% higher. It's trading about $70 per barrel, and when Brent crude, that's 0.2% higher, $78 per barrel. So yes, if I staying with the oil prices, post the major maritime disruption, several countries have jointly agreed to carry out patrols in the Red Sea as they want to safeguard the commercial shipping against the Houthi attacks, who are said to be supporting the Palestinians under siege by Israel in the Gaza Strip. Now, in a statement, U.S. Defense Secretary Lloyd Austin, on a visit to Bahrain, he identified several countries taking part in an international force.
Absolutely, and now let's switch focus to the events to look out for. In terms of corporate action, you of course have Accenture earnings, you have Saturn Credit Care that would be in focus, that is on account of meeting of fundraising committee. Now, Vedanta would also remain in focus to consider issuance of NCDs. And when you look at Samhi Hotels, that also has a 11.2% equity out of lock-in period. So that counter would also remain in the spotlight. Now, when you look at Zaggle, the lock-in is ending for 6.3% equity. So Zaggle would also remain in focus. Now, in terms of IPO action, you've got Happy Forgings, RBZ Jewelers, Credo Brands Marketing. So all of these would remain in focus. Now, in terms of other events, you do have IPL auction 2024, Japan's rate decision, and G7 virtual meetings. So the spotlight would be on all of those events as well.
Right, but let's move on to some global stories. Cloud-based design tool Adobe as well as Figma will terminate their planned $20 billion merger. Now, this latest development is coming in light of regulatory hurdles. The company had stated that there is no clear path to receive necessary regulatory approvals from the authorities. Meanwhile, Adobe will pay Figma a $1 billion breakup fee.
And US Steel's shares rose about 27% after Japan's Nippon Steel announces to acquire the company for a $14.9 billion deal to buy US Steel in a deal the valuation that we just mentioned, the deal price of $55 per share represents a 142% premium to August 11th, the day that the company announced a strategic review process.
And shifting focus to Tesla now, reports suggest that it has informed workers at battery factory at Sparks, Nevada that some set rate hourly workers will see pay increase of around 10% starting Jan 2024, and this will add anywhere from $2 to $8.30 per hour to their pay. Now, this move will eventually aid the off workers' appetite to form a union and push for a collective agreement in the US.
And tech giant Apple has made a surprise announcement as it plans to stop selling some versions of the Apple Watch in the US as soon as this week. Now, the company has said that it will no longer be selling its Apple Watch Series 9 and Apple Watch Ultra 2 from retail locations after December 20th. This comes after an ongoing dispute with medical device maker Masimo over its blood oxygen feature.
And in a landmark ruling approved by Pope Francis, Roman Catholic priests can now bless same-sex couples as long as they are not part of the regular church rituals. Now, this reverses a declaration by the Vatican issued in 2021, and the new document said that such blessings would not legitimize irregular situations but be a sign that God welcomes all.
And with COVID-19 cases increasing in Kerala, other states have initiated precautionary measures to tackle any surge in the cases. In addition to procuring testing kits, officials have been directed to conduct mock drills in all hospitals to assess bed capacity, including ICU beds, oxygen availability, and medicine supplies as well. It must be noted that the first JN.1 variant was reported from Kerala. Meanwhile, Karnataka government has also made wearing of face masks mandatory for people above 60 and those with more comorbidities. Jay Lakshmi from the Times Network is joining in with more details. Jay Lakshmi.
After the death of an 80-year-old man in the Kannur district of Kerala, the state has alerted the health ministry has alerted the state of Kerala to be cautious and take all the necessary precautions to avoid spreading of the COVID. A new COVID subvariant, the JN1, is now speedily increased in the state, and after this death of a person, the center and the state health ministry has advised people to take all the necessary precautions to prevent the spread of this new variant. They have asked the people not to step out much and to stay away from hospitals and public places as much as possible and to use masks as much as possible. That is what the health ministry has advised. And even though Health Minister Veena George has assured that there is nothing to panic and everything, the situation is control in the state and under control, and the health ministry is keenly observing on every thing that is monitoring the situation over in Kerala very much. Even though the health ministry has assured, she has also said that people with other diseases, with other comorbidities diseases, need to be specifically careful because it is through the respiratory diseases that the COVID is spreading right now, and people with respiratory diseases are to be much more careful. That is what the health ministry has advised.
And that was on the COVID update. Would advise everyone to stay cautious as well as safe. But with that, let's slip into a short break. Post the break, we mark the Asian markets. So stay tuned on the show.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. And a largely mixed handover coming in from the Asian markets. When you look at ASX 200, that rose about 0.5% on your screen right now, 0.6% thereabout. And it has also snapped a 6-day winning streak on Monday. And so that kind of a move definitely remains in focus. But let's also take a look at Nikkei. Nikkei is also a little bit on the back foot. Not doing much on your screens. And when you look at Hang Seng also, slightly in the red. Hang Seng is also not doing all that. Hang Seng, in fact, is down about 1%. When you look at Shanghai, that is a slightly more muted move coming in, not doing all that much. When you look at South Korea's Kospi, that was also marginally lower. So down about 0.1% thereabout. Now, one thing that is in focus is the Bank of Japan's decision. Now, Bank of Japan is expected to stick with its negative interest rate policy, according to a Reuters poll of economists. In fact, investors will be watching out for the BOJ's stance on its yield curve control policy. So that would possibly trigger a more defined move on the Nikkei, but let's see how that pans out for Nikkei.
Welcome back to the show and thank you for staying tuned in. Now we are on that part of the show where we talk about what's happening on the domestic front. Let's shift focus on the telecom sector. Well, the Telecom Bill 2023 that has been tabled in the Lok Sabha, and the bill is aiming to replace the 138-year-old Indian Telegraph Act that governs the telecom sector till now. So we have Sumita joining us. Sumita, what will be the key features of the bill, and does this mean ease of doing business for the telecom, satellite-based telecom companies like Reliance Jio as well?
Right, so Union IT Minister Ashwini Vaishnav today introduced the Telecommunications Bill 2023 in Lok Sabha, and the bill is touted to be one of the most comprehensive pieces of legislation that's expected to usher in major reforms for the sector, replacing an over 133-year-old Indian Telegraph Act. So let's go through some of the key provisions of the bill. Number one, it's quite a comprehensive regulation as far as spectrum allocation is concerned. So various chapters on spectrum have been incorporated. It's been made tech agnostic. So spectrum that will be taken for 4G will be used for 5G, and there's a provision for taking back unutilized spectrum as well. In fact, auction will be a preferred mode for spectrum allocation. However, for certain cases, spectrum will be given administratively, which is a norm that's also followed in the US as well. In case of public emergencies, warlike situations, the central government will have the powers to take control of telecom services and networks. Then there's biometric verification that's been made mandatory for telcos to avoid fraud SIM usage. Then there'll be a legal backing against spam calls and pesky calls, and there'll be a punitive element involved as well, meaning that there will be punishments also as far as spam calls are concerned. Then there's a legal framework for cybersecurity standards as well to avoid it being misused by bad actors, also considering how attacks are increasingly turning geopolitical. Next up is dispute resolution, which again has been given a step-by-step, detailed and digital by design framework to keep it user-friendly and, of course, transparent as well. So user grievance addressal has to be provided by a service provider. In fact, there's a provision of voluntary undertaking as well that will be given to companies so that they can have a chance to accept their errors and rectify them thereof. And there's a trusted source regime in the legal framework as well, considering economies are operating digitally. The bill, remember, in the existing draft is coming after expansive consultations with industry stakeholders, experts, brands, and of course civil society members, and their views have been heard. All eyes now on the discussion day.
Well, absolutely. Thanks, Sumita, for that update. So, Lisa, that pretty much sums up your answer, but we'll see how telecom stocks also react and trade. Now, democracy is always chaotic, so let's switch focus to that. But the Indian parliamentary democracy has taken an unprecedented turn in the run-up to the 2024 general elections. 78 MPs from both Lok Sabha and Rajya Sabha were suspended yesterday, allegedly for creating ruckus. Now, 14 MPs were suspended last week. The opposition MPs were demanding a statement from Home Minister Amit Shah on the Parliament security breach last week. The question is very simple. Who is at fault for the deadlock in the Parliament? Is it the opposition strategy to make the government look bad? Or is the government running away from answering tough questions? Or is this just a political game ahead of 2024 elections? Let's listen in to some reactions to answer those questions better.
Members in deep pain. Right from the start of today's proceedings, some honorable members had disrupted the House by shouting slogans, even entered the well of the House. The House had to be adjourned twice. Thereby the agenda by the House could not be taken up. Honorable members may appreciate that 0-hour submissions and question hour belong to them to raise matters of public importance and hold government accountable. Despite my repeated requests, some honorable members continued their act of willful defiance of the directives of the chair and violation of the rules of House due to their ignoble and grossly disorderly conduct.
Only for one purpose, to suppress the entire voice of the opposition and to suspend maximum people, those who are raising the issues of the people and the security. This is the thing is happening. Because this the parliament is actually our impression is that parliament is for discussion and debate. But now the parliament is for suspension of opposition members.
In India, we had the late Mr. Arun Jaitley once saying that disruption is part of parliamentary technique. During the 2G times, an entire session of parliament was not allowed to function. It is incumbent on a government with big numbers to also take into account the fact that the opposition also represents the people of the country. You can very well just say, okay, we suspend everyone and we just say we pass this bill, we pass that bill, we pass that bill. But those bills are important for the country as a whole.
And with that, let's slip into a short break, but stay tuned on the show as we talk about and discuss about more stock-specific action.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at Happy Forgings. That has launched its IPO. It is a book-built issue and will remain open for subscription till December 21st. Ashesha is standing by with more details. Ashesha?
Well, yes, so the company is looking to raise over 1,000 crores from the capital markets, and it has already raised about 303 crores from anchor investors ahead of its IPO. Now, the IPO price band has been fixed in the range of 808 to 850 rupees per share. It is part OFS and part fresh issue. Out of the total 1,008 crores that the company is looking to raise, about 608 crores is offer for sale and the balance 400 crores is fresh issue. Let's have a look at what the company really does. So it was incorporated in 1979. It is a manufacturer which specializes in designing and manufacturing heavy forgings and high precision machine components. As far as the objects of the issue are concerned, out of the total 1,008 crores that the company is looking to raise, about 213 crores will be utilized for purchase of plant and machinery. About 190 crores will be utilized for prepayment of debt and the balance for general corporate purpose. As far as the customer base is concerned, it has a very solid customer base with the likes of Ashok Leyland, JCB India, M&M, SMN, Isuzu as some of its customers. So it has a very solid customer base. As far as the segment-wise performance is concerned, it generates about 44% of its revenue from CV segment, about 37% from the farm equipment segment, and about 87% of its total revenue comes from the domestic Indian market. As far as financials are concerned, it generated about 860 crores in FY22, which surged to 1197 crores in FY23, and margins have also been solid in the range of 27 to 28% over the last 2 years. Analysts, meanwhile, believe that the IPO is fairly priced. So yes, 1,008 crore IPO that will hit Dalal Street today.
Thank you, Ashesha, for taking us to the key details of Happy Forgings. The IPO will be launched today. But moving on, Westlife Foodworks will also be in focus, and this is on the back of the management meet with Axis Capital. Now, Axis Capital, it noted down the key takeaways, particularly that the management has indicated that the demand slowdown is there to remain in the overall QSR space. Gaurav is joining in. Gaurav, other than demand concerns, what are the other key highlights highlighted by the management?
So yeah, Lisa, as you said, Axis Capital met with the management of Westlife Food World, and there are some updates we have in the QSR space itself. So as you said, QSR space, the entire demand in the QSR space has been slowing down, and company specifically saying that they are also seeing the same thing happening in their company. So we know that Westlife Food World is known for its brand McDonald's, and they see that there has been a reduction in the average check value for their restaurants despite the footfall being at the steady state. They have also reiterated that they will open 40 to 45 new restaurants in the year. I mean, out of which most of it has been done already. And after this, the store count is going to be at 380 odd numbers in FY24 itself. Despite this, they are expecting. Now, Axis Capital is actually expecting the revenue to grow almost by 7% for the company. But let's also talk about the cost and the other margins. So, the raw material cost has been going down, and according to Axis Capital, this is going to boost their raw material component and gross margins. But despite this, we might see some kind of decline in EBITDA margins as well as in EBITDA because of the slowdown in this growth. And there are some negative cues coming in for the company, but Axis Capital believes that Westlife Food World is actually continuing to invest in network expansion, menu innovation and cost efficiency measures. That is going to lead to some kind of positive outlook for the company, and that is why they have maintained their ad rating, and but at the same time they have cut the target price to 900 rupees per share.
Well, absolutely. So Westlife Food World will definitely remain in focus, but let's switch focus to the futures and options roundup. And Ansh, how are you looking at it?
Right, so starting with Nifty first, like you can see in the chart as well, Nifty formed an inside candle in the previous session, meaning the trading range was within its previous range. So here this indicates that there could be a potential pause or consolidation here. Let's see what happened in F&O segment. Open interest in Nifty dropped by around 8%, indicating long unwinding. So here longs are getting covered. Whereas on option front, we are seeing very active call writing at 21,500, indicating strong resistance here. Whereas on the downside, we are seeing put buying at 21,400, which indicates that there are some chances of index coming down below this level. Shifting our focus to what FIS did, in index futures, they added net increase of 1,000 contracts on upside, due to which the total long positions has inched a bit higher to the round figure of 60%, which is almost at a 3-month high now. So in a nutshell, market looks overbought, and we may experience some consolidation here before breaching the 21,500 level on upside.
Thank you, Ansh, for that. So some consolidation is expected. That's the word coming in from Ansh. Thank you, Ansh. But moving on to the brokerages segment, well, we have Gaurav to take us through all the brokerages. Gaurav, we have reports coming in from JP Morgan, Antique, as well as Axis Capital. So take us through what's on their radar.
Yeah, so Riza, as you said, we have some of the brokerage notes coming up, and first let's look at Reliance Industries, where JP Morgan has maintained its overweight stance and a target price of 2,810 rupees. Now they believe that Reliance has been seeing some kind of gap in its standalone and its consolidated revenue, because we have seen significant increase in its telecom and retail businesses lately, and they also believe that the stock has remained range bound because there has been pressure in the large earning cuts, but this should be behind us now, is what they believe. And specifically retail and telecom EBITDA is likely to grow, and the reduction in capex is also something that is expected by them, and that is why they have maintained the target price of 2,810 rupees per share. The next one we have is initiation note on Sansera Engineering, where Antique has initiated with buy rating and a target price of 1,155 rupees per share. So they believe that they already have strong order value, and on back of this the revenue is going to be strong. The company is also going to increase their addressable market going ahead, which is again going to add up to their revenue, and the profitability is also going to increase because their product mix is going to change now. And on back of this, Antique has maintained the target price of 1,155 rupees while initiating with the buy rating. The next we have is Avalon Technologies, where Axis Capital has now initiated with the buy rating and target price of 720 rupees per share. They believe that it is India's EMS industry overall is going to grow significantly and higher than the global EMS industry. They also believe that Avalon is one of the key players in the vertical integration of the EMS players, and apart from that, they believe that EPS should increase with a CAGR of 34% YY going ahead, and the ROA should also be in the range of 15% to come up to a target price of 720 rupees. So let's keep an eye on all these stocks as well.
Gaurav will definitely keep an eye on these stocks, but even upstream oil stocks be in focus today, and that is because the government has cut the windfall profit tax on the crude oil produced in the country as well as on the exports of diesel. Now, talking about the tax that is levied in the form of special additional excise duty on the domestically produced crude prices, that has been reduced to 1,300 rupees from earlier 5,000 rupees per ton, and this is according to the official notification. Now, the special additional excise duty that on the exports of diesel, that has been reduced to 0.50 a litre from earlier 1 rupee per litre. However, the levy on the export of jet fuel or ATF, that has been hiked to 1 rupee per litre from nil earlier, and the special excise duty on petrol, that will continue to be 0. Now, the new tax rates that will come into effect from today. Now, remember, India had first imposed this windfall profit earlier in last year, that is in July. So, yes, upstream oil companies will be in focus today.
Well, absolutely. So, keeping it with the stocks that will remain in focus today, Sun Pharma acquired 16.7% stake in Lindra Therapeutics for about $30 million US, and it is engaged in the business of developing novel delivery technology for long-acting oral therapies. Now, another stock that will remain in focus will be InfoEdge. They've agreed to invest an amount of about 40 lakhs in Jeevan Sathi Internet Services Private Limited, which is a wholly owned subsidiary. So, InfoEdge will also remain in focus. Also in the spotlight could be India Glycols, that allocated quantities through tenders, participation for supply of 16.55 crore litres of ethanol. Now, the estimated value is aggregating to about 1,164 crores under the ethanol blended petrol program during the ethanol supplier from 1st November 2023 till 31st October 2020. Now, when you look at Supreme Petrochem, that will also remain in focus on account of that execution of shareholder agreement and share purchase agreement with Tata Power Renewable Energy Limited regarding supply of solar energy to company through its SPV. Now, the company will purchase 26% of equity shares in the SPV from TPREL and Tata Power Renewable Energy Limited for an investment of about 5.36 crores. Now, you've also got all cargo logistics that will also remain in focus. Now, the company's wholly owned step-down subsidiaries, ECU, Hold NV, as well as Antwerp Freight Station NV, has acquired a stake in Eurocenter FZCO and ECU Line Middle East deal. Now, the deal is around for a 14% stake in Eurocenter FZCO, while when you look at the deal value coming in for ECU Line Middle East LLC, you're at a 51% stake. So, all cargo logistics on the back of all of these news flows will definitely also remain in focus, Lisa.
Right, I would call it a Christmas season, but actually it's the season for IPOs, because after Happy Forgings launching its IPO, now it's Credo Brands that will be opening for subscription today. And Vamakshi is here with all the key details. Vamakshi, take us through all this.
Well, yes, all eyes on Credo Brands marketing IPO. The IPO issue size is 550 crores, which is entirely an OFS, which means that the selling shareholders will be the ones that receive the proceeds, and it is not the company that will be receiving the proceeds from the IPO. Now, moving on to the shareholding, then the promoter and promoter group holding is expected to decline as a result of this offer for sale to almost 55.4%. Now, let me quickly take you through what the company actually does. It is predominantly in the Indian menswear category. In fact, it is one of the largest homegrown brands in the mid-premium and premium segments in the Indian market in terms of market share in FY22. They have in fact introduced the brand Mufti, which is now celebrating its 25th anniversary. Its range of products includes shirts, t-shirts, jeans, amongst others. In fact, they had a presence across India. They had almost 1,807 touch points as on September 23, and in fact this included 404 EBOs, 71 large format stores and 1,300 multi-brand outlets. Moving on to the company company's financials, then they have seen a very robust trajectory, especially in terms of its revenue. Revenue has seen a growth of almost over 40% from FY21 to 23. Apart from that, the operational efficiency, and as a result, its profitability has also seen a marked improvement. So definitely the company does have some strong financials as far as that is concerned. But moving on to the company's valuations, then FY24 PE ratio for the company, as per our calculations, assuming a growth rate of almost 20%, same PAT margins comes at around 19.4 times, which compared to some of its peers is actually quite reasonably valued. So those are all the important details for the Credo Brands marketing IPO, and definitely on the back of that, watch out for this counter.
Well, absolutely, Vamakshi. We'll keep an eye on Credo. So, Lisa, it does look like it's the IPO season, but onto an exclusive now. ET now learns from sources that the insurance behemoth LIC might be exploring a new fintech arm. My colleague Anurag is standing by with these exclusive details. Anurag?
LIC on a journey of digital transformation, and as per our sources, the new fintech arm setup of LIC, that is DIVE, Digital Innovation and Value Enhancement, is likely to be launched next month, that is January 2024. So all type of customer onboarding, customer operation will be through digital mode that will go live from January 2024. And DIVE, it's a new fintech initiative of LIC. It's an initiative for all the stakeholders, customer, intermediaries, etc. So Kelton is a global digital transformation service provider which has got this multi-year project of India's largest insurance provider for the digital transformation. So Kelton will bring the digital revolution by implementation of the state-of-the-art HR tech across the extension network of LIC of more than 4,000 locations. So the work is going on, the project is on track. And the government also want LIC to regenerate and transform its services with a digital focus as per the demand, as per the need of new generation millennials. So with this transformation, target is to include designing a new product by adopting digital technologies. Because government also believes that reinvented LIC will have a much higher valuation, can show the true potential to investors. So in this line only, LIC has planned some roadshow also. We'll get to know about the roadshow to attract the foreign investors. So going ahead, the DIVE initiative, the complete digital initiative, will be live from next month in New Year, January 2024. All type of onboarding will be through this DIVE initiative. All operations, around 95% operations of LIC will be through this DIVE initiative.
Thank you, Anurag, for that. So that was on LIC mulling to float and a separate fintech arm. But exclusives after exclusive, we learned from reliable sources that Tata Consumer is set to buy a controlling stake in Ching's secret parent company. So let me go across to my colleague Cheryl D'Souza for more on this. Take it away, Cheryl.
Yes, indeed, a very big M&A brewing in the consumer space. And if all of us love eating desi Chinese, then I'm sure that all of us know Ching's secret. And we all know that there were talks underway for a while now where Capital Foods, which is the parent company of Ching's secret, that was looking to actually look at the sale of the company. Remember, there are three promoters of three owners of Capital Foods, and they are namely, one is the founder and the chairman, that's Ajay Gupta. You have Invest Group as well as General Atlantic. All of them were looking to actually look at offloading their stake in the company. And what we are picking up from the sources right now, that indeed it is the Tatas that have emerged as the front runner for buying out the controlling stake in Capital Foods. So yes, that's the big exclusive details that we are picking up from our sources, is the fact that Tata Consumer is now the front runner to actually bag Capital Foods and bring that particular company into its kitty. Remember, the Tata Consumer is aiming to be a complete FMCG company, and this sort of a foray will actually boost the kind of product mix that Tata Consumer already actually has. Given the fact that what we are also picking up from the sources is the fact the deal is valued around $1 billion or so, and the fact that the current management of Capital Foods will be on board for the next 3 years. What our sources are also telling us is the fact that this particular deal will be completed by March. So that's a big exclusive detail that we are getting out from our sources, is the fact that the Tatas have emerged as a front runner to buy the controlling stake in Capital Foods. The current board will stay on actually managing the company for the next 3 years. Deal is expected to end or be completed by March. And also what we also done is that we did write to Tata Consumer to get their response on this particular deal, and they've said that they do not comment on market speculation. So that's the big exclusive that we are getting, is the fact that Tatas have indeed emerged as a front runner to buy controlling stake in Capital Foods.
Well, thanks, Cheryl, for those exclusive details. Let's also switch focus to news now. At least 110 people lose their lives in a 6.2 magnitude earthquake in northwestern China, and over 200 people are reported to be severely injured. Rescue operations are underway as China activates level 4 emergency response. Several villages suffer power failures and water disruption. In fact, Iraq also held its first local elections in a decade. Voting took place in 15 out of the country's 18 provinces to choose 285 council members, and around 6.6 million, that is 41% of eligible citizens, cast their votes. This is ahead of Iraq's general elections due in 2025. Opposition Bloc India will convene in Delhi today to discuss seat-sharing arrangements and a campaign blueprint for the upcoming 2024 Lok Sabha elections. This comes only a day after 78 MPs were suspended from Lok Sabha and Rajya Sabha.
And that was all the time we had on this edition of Market Cafe, but stay tuned as we take all the action on the market ahead. For now, it's a goodbye from me as well as Shreyansi. Thank you for watching.